Hello, traders. It is Monday, August 18th, 2014. It's 8:01 a.m. Chicago time. Glad to be back in the office in Chicago today. Everything's back to normal. Thanks for sticking around these last couple of weeks as I talked to you from Toronto while visiting family. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news. The French finance minister says that they need the euro at a more normal level. Not sure what he means there. French deficit will be at approximately 4% this year. Messaggero says that Italy may postpone the balanced budget goal of 2017. So you can see the weaknesses there. Eurozone June trade balance surplus is bigger than expected, 16.8 billion euros versus 15 billion euros, so that's some good news for Europe there. As far as geopolitical, Iraq State TV says government and Kurdish forces are retaking Mosul, the Mosul Dam area from ISIS militants. Of course, that is with the backing of the U.S. Air Force and Navy with airstrikes. Ukrainian government forces make more progress against rebels. They raise the flag over formerly rebel-held police station in Luhansk. Russian defense minister denied Kiev forces destroyed a Russian military convoy. If you recall on Friday, and I'll discuss this further, the market dropped hard on news that a convoy had been attacked by the Ukrainians and partially destroyed on Friday, causing the European markets to lead the drop down and tumble. The Russians are saying the reports are a fantasy. No Russian column crossed into Ukraine. There's a meeting in Berlin between Russian, Ukrainian, and French foreign ministers to discuss a more permanent ceasefire. Overall, no deal yet in the Cairo talks with regards to Israel and Gaza. Latest temporary ceasefire is due to end Monday night, which is in a few hours, actually. And then finally, the Bank of England's Governor Carney throws out another curveball to the market, stating that the Bank of England will not wait to see real wage growth before hiking the bank rate from historic lows. So he's stating that they're ready to go with the rate hikes. At 9 a.m. today, we're expecting NAHB housing markets in the U.S. Expectation is 53.0, and then at 10:30 today, Central, of course, we have a 3-month bill auction for 29 billion and a 6-month bill auction for 25 billion. That's the only thing that's on deck today for news. Let's take a look at what the market has done. So, real quick, I want to show you what it looked like on Friday. So here's where the market started to fall apart. When you see a tight cluster, most days this is a percent change chart. So it starts right at the open. The U.S. market open at 8:30 Central, 9:30 Eastern, the Wall Street open. It does not look at Pitt and so on. And essentially what you have, the products you have here are crude oil, gold, U.S. bonds, Japanese yen, euro, NASDAQ, transports, ES, Dow, Russell, Euro stocks, and the DAX. I also have the Bund on here, but it's not showing up right now. And essentially what you have is this sort of noise here across products throughout the day. I can tell when there's a news event, because what happens is you suddenly see a strong divergence between the fundamental products, which are gold, crude oil, bonds, the yen, and index products. So you can see them separate. Like you can see right here that those flight to safety products immediately shoot up, and then the indices immediately shoot down, with brown being the DAX. The DAX dropped really hard on Friday. with the Euro stocks, and you can see it just could not recover from the lows. A big move from the U.S. Open, 2.5% down, and it just becomes very obvious whether or not the move. What this chart helps me with is to determine if a strong move in a product is created by technicals within that product, or if it's created by a fundamental piece of news that has not hit the tape yet. Or that has not hit the news wires yet. I have a couple of news feeds, live news feeds, live news squawks to hear what's going on, but a lot of times you'll see the action happen as people closer to the event act first. Let's look at what happened on Friday. On Friday, we expected and got an open auction out of range. The market opened at 1959. My hypothesis for Friday was for responsive selling down to 56 even, if you recall. And of course, you're always welcome to watch the video on YouTube. They're recorded and archived there for your reference, youtube.com/FuturesTrader71. And you could the expected trade on Friday was responsive selling down to 56 for a test, 56 being a key area described in Friday morning's Trader Bite. It got to 56.25, so just within a tick of what was expected. Then we got the bounce. My primary trade idea was a test of 56, a hold of 56, rotation up to 63 initially, chop, 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 and then eventually getting 65. Where does the 65 from? The 65 is right here. It's an open, previously accepted high volume area that continues to be open. It's an open gap at 65.50. So the market finished with pretty good strength on Thursday. Right here, closed basically 4 ticks from the or 2 ticks from the high on strong delta. I also commented on Friday that the delta, the volume delta, which is the amount of contracts, the quantity of contracts trading on the offer, meaning aggressive buyers minus aggressive sellers, gives you the volume delta. The volume delta has been pitching up on the close, whereas for the last 3 weeks it has been pitching down. It's been selling off, like right here, and I went through that. Won't go through that again. We continued the strong buying from Thursday through the overnight session, which was what was expected. I tweeted about that. We tested the 56 early by getting 56.25, just missed it by a tick, and then the expectation is to go to 61, chop, 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 and then eventually find its way up to 65, 65.50. Where we would get about 10 points of range, 9 points of range, and that'll be it for Friday. Okay, that was the primary trade idea based on how the market's set up and has been auctioning lately. However, what we got was the break of the initial bounce, which is the first hour high and low here at 16.25. We got the break, so that's traditionally in profiling, that's an indication that there is strength coming into the market. Whichever side breaks that first hour first. So it was confirming the big trade idea of the day to go to 65.50, breaks to 61, and then all of a sudden crosses to the other side, unable to retest, and then just drops, and then when the news comes out, it just falls right through. And then basically it chops around for the rest of the day, with 49 being the key area down here. It's the point of control of the balance profile left behind by Thursday, but we basically had a bearish engulfing candlestick, so to speak, on a daily chart on Thursday, on Thursday's range. So Friday just engulfed Thursday completely and closed within it. Not such a strong close after all. There was an additional rotation down to 37.25. I want you to notice how logical the market is. It may seem chaotic, but very logical at these levels. Remember 37.75, 37.75 outlined here. This is not a new line that I put on here. This has been here for a while. 37.75. If you scroll back, you'll see where that comes from. 37.75 was tested back here. There's your 37.50. Okay, and we picked up the 37.75 from a low volume node from where we were when we were in balance down here. That was a divot in the profile right here before we filled it back in. And look at what it did. It breaks down on the news, bounces back up, chops around a little bit, and then we have the continuation. On the Stage 5 Ask a Question webinar on Friday, I had suggested that this is likely to have a continuation move lower, and it did. And where does it go? 2 ticks past that 37.75, and then if that's where it finds the responsive buyers back, and then the market pushes back into Thursday's range for a more choppy trade, and then finally recovers to Thursday's close, basically, and that's where we closed. The close on Friday brings in strong delta again in the trigger chart. So you look at this close on Friday, and you're getting this strong delta here. Again, somebody who participants were strong sellers for the last couple of weeks, and they're strong buyers on the close this past week. That's to me that's been indicating and confirming that there's a change in the sentiment, and that's why we're as high as where we are. The expectation, if this were a pullback for selling, if we look back at what we've done over the last couple of weeks. So if this was just a pullback on the selling here for a further test lower into the gap zone here at 95.96, what we expected is a pullback to 37.75, and then if that holds, then a drop through to 90 to 96 area, 1896 area. Otherwise, if we get a deeper pullback, 45, 45.75 are the key areas that sellers must hold, and they did not. They did not. Pushes through, gets into this upper balance zone, so that's why on Friday I was looking to target the 65 area, with the key area to test above at 71.25. Those are the key levels, okay? And what the market's doing is it's rejecting lower prices, and we see that especially on the close. So at the end of the day, somebody's buying, pretty strong buying to the tune of 20, sometimes 30,000 contracts more trading on the offer than the bid, and the market's pushing back up. So this is a pretty strong close, believe it or not. We've rejected this whole area down here. We found our buyers, some really nice tails on the 15-minute. The market closes above mid, right up against Thursday's close, into the thin zone above. The expectation is for this to continue rolling up, back up over 56, and here we are on the overnight, having traded up to 64.25, just 3 ticks short of our 65 target, and holding 63.50 as of right now. Pretty strong trade in the overnight. So there it is, gap open, very strong open, chop, chop, chop through the Asian session. It just seems like the Asian session does not get any action at all. And then as Europe opens, it's another strong push, and it's just held it. Look at how poor this high is. Look at that high. It's an awful high. 57,000 trade to 432. Pretty poor high. The overnight high is expected to go, so the initial target for anything would be 64.25 this morning. Pretty good volume, not as high as prior overnight sessions. 193 on Friday, 176 today. We still have another 14 minutes to fill that in a little more. There's been an interesting move right after the trader bite ends. There's been an interesting move right before the open, so we'll see if that carries the volume up to 200,000 or so, where it's been lately. So with all that being said, the expectation this morning, again, gap open, expecting an open auction out of range. In other words, the market to chop around back and forth, and then the expectation is for responsive selling back into the 61 and then potentially into the 59 area. If it can find buyers, then I expect it to roll, turn over. If it does not take out the 64 and a quarter right at the open, which is kind of expected, I'm looking for the open auction to take that out early. If it doesn't, then I expect it to take out the 64 and a quarter, push to 65, 65.50, and it actually brings the key area to test, which is 71 and a quarter, into range. That puts it just 8 points away. So we're looking for a test balance point of control here. It's a two-pronged composite area. When we were balancing here through the entire month of July, the first day of July we gapped up and we traded this whole month in this chop zone between 45, 75 and 85, 75. So we did 40 points for the entire month, and we're back there. It's a two-pronged profile at 67 and a quarter and 71 and a quarter. Those are the key areas that are likely to be tested here today. That's what I'm looking for today. If that fails to happen, and like I said, my goal here is not to predict and be right as far as what the market will do. My goal here is to try to create a strategy for each situation, a hypothesis, so to speak, ideas on what the market can do, and then based on the price action and what areas would fail and what areas would hold, then I'm looking, my next job, if you look at this as a checklist, my next job is then to find, based on the action during this session, to find an area to lean on. If I'm taking a short, to find an area to lean on that would give me a higher probability, or it would be easier for the market to get my scale, which reduces my risk remarkably. I have an asymmetric risk profile once I get a scale, and then once I get a scale, that's the key element. If I get my scale, I can relax and let the trade work. Otherwise, I have to be attentive, and anything can happen. So that's the idea. The idea is to wait for the market to fail, and if I want to get a short, take the short in an area where the market, it's easier for the market to get a scale out, for me to get a scale out, than for the market to push through to the other side and stop me out. And then other than that, you leave your hands off the mouse and let the market play its course. Play the plan that you had made in a calmer, more logical environment, which is now, which is the pre-market, the planning phase. The thing I've noticed, having been a broker as well as a trader for a while now, and watching over all of Stage 5's traders as much as possible, I've noticed that there's an incredible amount of knowledge about the market. There's some good planning. The issue always creeps up in execution. Execution is the weak spot for a lot of people, in that once they get into a trade, all of a sudden they get smarter and they get fearful and they get this and that, and they start to overmanage a trade, and only later to complain that, you know, here's the market doing what I expected it to do. If I had only held on, I would have seen some fruit for my labor doing homework all afternoon on Sunday night, only to blow it by overmanaging the position. So that's the common thing. So that's my process here, and that's the whole point of having these hypotheses. If the market breaks through this 58.50 and starts to cut through this 56, then the 45.50 becomes our key target below, because the market's now rejecting prices up high, has found its seller, and is pushing through. Again, 56 even is a key number. 56 and a quarter tested early on Friday. So if it gives this area up, then we're looking at the point of control below at 45.50 by the end of the day. Okay, so those are the two key plans. I won't go any further into it. Again, you have, I'm going to be on Day Trading Radio to do my weekly update for that group at 10 Central, 11 Eastern. Tune into that, daytradingradio.com. And again, headline risk is pretty high. We don't know what's going to happen with these negotiations in Israel, as well as the Ukraine, and whatever else is going on in Iraq and so forth. The news has been driving the market. Good luck today, and I'll catch you next week. Hopefully this is useful to you. Take care.